This is Matthew Cratter from Trade University, and today I want to talk about some bad news for gold bugs. For those of you who don't know what a gold bug is, it's just someone who's obsessed with gold and thinks that it's a very good investment over the long term. I actually used to be a bit of a gold bug before I discovered Bitcoin, but more on that later in this video. So it's been a really bad decade for those who have chosen to store their savings and their wealth in gold. We've seen a decade of incredible money printing by all the central banks, especially by the Bank of Japan and especially by the Federal Reserve. We've seen the money printers go burr. We've seen the Fed grow their balance sheet from near the start of this decade, about $2 trillion balance sheet. Now it's at an $8 or $9 trillion balance sheet. So there's been all this monetary debasement and all this money printing. You would expect this to have been a really good decade for holders of gold. Instead, gold, currently trading at 1,700 roughly, is back to levels it last saw 10 years ago or 11 years ago in 2011. So gold has really not done much this decade, which is quite surprising. You can argue it's being suppressed by all the paper gold, it's being manipulated by central banks, etc. But this sort of begs the question, if you're holding it to hedge against central bank mistakes and central bank power, how can it ever help you if the central banks are able to keep it down forever? Now, maybe they're not able to keep it down forever. This is an ongoing debate. I've suggested that Bitcoin is slowly usurping the place of gold. It's in the process of demonetizing gold. And the reason for this is just a technological superiority, which I talk about in yesterday's video, which I'll link to below. If you haven't watched it, I would check that out before you watch this video. And while we're here, I also ask you to just click that like button, click that subscribe button. It would really help out the channel. So in yesterday's video, we talked about the ideal properties of a monetary good, of something that is money, and why Bitcoin is superior to precious metals like gold and silver as money. There were two main points I made, which I'm going to elaborate on here. Gold and silver are much more prone to centralization and capture because it's difficult to move them. They tend to centralize in bank vaults and government vaults. It's difficult to move gold around, to store it, to assay and verify that it's genuine. So you can check out more. I go into the details in yesterday's video. Also, the other problem with gold is it's not a pure monetary good. It has, both gold and silver have these industrial uses, and so commodity demand for them, for example, if people are making more iPhones and more cars, this may actually increase the price of gold or silver as there's demand for these commodity inputs, and this could provide false monetary signals. So one of the nice things about Bitcoin is it is a pure monetary good. Now we have more bad news for holders of gold. This came out a couple days ago, but there's a lot of talk online that Uganda has found 31 megatons, I think it is, of gold ready to be mined. They've already contracted with a Chinese firm to dig up this gold. And the estimates for the value of this gold are close to 13 trillion, 12.8 trillion at today's value. Now, the reason this is so significant, and again, we assume this is true, there's good evidence that this is true. I don't think this is a spammy article. The important thing about this, though, is that this would essentially double the existing supply of gold. The current market cap of gold is around 11.5 trillion. If this gold is enough gold to be worth 13 trillion, that's more than doubling the current supply of gold. This is a devastating thing if it's true. Did the global supply of gold just double? Possibly. If so, it's really bad news for holders of gold. Now, it's going to take years to extract this gold completely, but it's going to constantly be dumped on the markets for decades to come. And this will have an impact on the price if this is true, especially because gold historically, gold miners have only been able to increase the supply of new gold that's brought out of the ground from below the ground to above the ground and stored in gold inventories. People have only been able to increase this by 1 or 2% a year. Another way of saying this is that gold has a very high stock to flow. It's very scarce. It's hard to increase the supply of it in demand by demand for higher prices. So if the price of gold goes up, production is not able to rise up that much by comparison. Now, if the price of wheat goes up, everyone and their grandfather will be planting wheat on the sides of their house and in fields that were previously devoted to corn. So most commodities have the supply-demand function. Gold is very, very hard to increase the supply, but what appears to have happened here is this magical discovery has doubled the supply of gold. It looks like this is already beginning to affect the market. It's of course difficult to know whether this is the result of Fed policy and the hawkish talk over the last couple days, but basically this news article came out on July 5th, and we've seen the price of gold move from above 1,800 down into the 1,700s. So if this is credible news, and if this turns out to be true, we could expect gold to move much, much lower. By contrast, and this is one of the other nice things about Bitcoin that we didn't really discuss in much depth yesterday, Bitcoin has true scarcity. There's a 0% chance that someone's going to find a new Bitcoin mine in Africa that will increase Bitcoin's maximum supply. This is because Bitcoin is mined by the Bitcoin miners. They are bound by the consensus rules. If they try to cheat, their blocks will be rejected by the full nodes. And we know the future supply of Bitcoin. We know it's 6.25 new Bitcoin per block. That will be halved in a couple of years from now. It will be halved again and again. And the ultimate result will be this asymptotic approach to 21 million coins. A lot of those coins have already been lost, so the actual final amount will probably be closer to 16 or 17 million Bitcoin. So as we said, Bitcoin's maximum supply is the result of its credible future monetary policy. It's always had the same monetary policy. It always will. By contrast, things like Cardano and Ethereum, they're constantly having hard forks and changing their monetary policy. Ethereum is even trying to change their consensus mechanism from proof of work to proof of stake. And if you can have money, you want it to be unchanging and stable. You want that base layer to be very stable. And really only Bitcoin qualifies for this. So Bitcoin has credible future monetary policy. Another way of saying this is we know what the future supply issuance, what the future supply will look like, and what the future issuance schedule will look like. Again, it's 6.25 new Bitcoin every 10 minutes on average, and then it'll get halved again and go down to about 3 Bitcoin, etc. This consensus is enforced by full nodes. It's enforced by the incentives. But can't Bitcoin's code be changed? This is always the question. Yes, it certainly can be changed. It's very easy. It's open source. You can do what's called forking Bitcoin. You can borrow the code and you can change some of the code. Maybe you double the supply. You say instead of having 21 million maximum supply of Bitcoin, we'll have 42 million. We'll double it. You can do this, of course. Anyone can do it, but it's the same thing like starting your own language or starting your own probably it's a lot like starting your own language or starting your own Facebook. No one is going to follow along with you. You can go do it. Nodes will refuse to run any software that increases the Bitcoin maximum supply because by doing this, they'd essentially be diluting their own holdings. Most people who run nodes do it because they are Bitcoiners and they hold Bitcoin. Otherwise, there'd be no reason really to do it. If you fork Bitcoin and create Bitcoin 2.0, let's call it, and increase that maximum supply, basically you're going to be playing your own game. You're going to be playing donkey basketball while the rest of us, the real Bitcoiners, are playing NBA basketball. So this will be us, NBA basketball, and this will be you or anyone else who forks it. You can, of course, create donkey basketball. You can do your own thing off in a corner, but no one is going to follow you. This is not going to become global money. And this is why we can be fairly certain that the supply of Bitcoin, the maximum supply of 21 million, is not going to change anytime soon. Maybe there will be the social consensus around this will change. Things always sort of deteriorate and decay over time. Maybe in 200 years from now, people will have the terrible idea and they'll actually be able to change the supply. But I think for the next few decades, and certainly probably even for the next 100 or 200 years, the maximum supply of Bitcoin is quite safe, and no one is going to be trying to play donkey basketball with it. By contrast, gold, you can have these large discoveries. There's a lot of gold under the ocean. There's a lot of gold in the asteroid belt. There's a lot of gold in the solar system. It's not quite as rare as people think. Now, again, to go back to forking Bitcoin, maybe if you fork it and try to create a bigger block size or try to increase the maximum supply, you will end up getting wrecked. This is what happened to Roger Ver and Bcash, BCH. If we look at a chart here of BCH versus Bitcoin, if Bcash is strengthening, this chart will move up. If Bitcoin is appreciating against Bcash, this chart will move down. And we can see here that this has been a disaster for those who chose to store their wealth in Bcash instead of Bitcoin. So it's always very important when you're storing your savings somewhere to have an idea of the opportunity cost of not holding Bitcoin. And in the case of Bitcoin's forks, holding a fork of Bitcoin like Bcash or BSV or Bitcoin Gold or one of these things is a huge opportunity cost. We can see that this chart has been going down for a very, very long time, almost since the very beginning when the Bcash fork happened in 2017. I get this comment fairly often when I talk about gold. A lot of people don't know that I used to be a bit of a gold bug myself. But here's a comment from Kev yesterday saying, I think you do yourself a disservice by bashing gold the way you do. You seem to be a free market guy, so let the free market decide. And I disagree, it shouldn't be gold versus Bitcoin. It should be gold and Bitcoin versus the dollar. Now, this ignores the basic choice that we all need to make. If you're trying to choose, let's say you were on MySpace, the social media company, and you had a page there, and then Facebook came out, there was no opportunity cost to moving to Facebook and having your rock band on Facebook and your rock band on MySpace. But there are choices to be made. If you invest $10 in one investment, let's say you invest $10 in gold, that is $10 that you cannot then invest in Bitcoin. So these choices really do matter. You can be agnostic about these things and hold 50% Bitcoin and hold 50% gold, but this would not have been a smart thing to do in most cases. If you were going to hold 50% in Apple stock versus 50% in BlackBerry, or 50% in MySpace versus 50% in Facebook, there's an opportunity cost involved. I do point out in my response to Kev here that I'm not a regulator or legislator. Let the free market decide. And as part of this, I will voice my opinion on YouTube about what I think is going to happen and the way I'm choosing to invest my own money. It doesn't mean you should do it the same way. And I also point out in this comment, I tell them to take a look at the chart of gold versus Bitcoin if you want to see what the free market has already decided so far. As I mentioned in the video, human civilization already tried gold, and it led directly to the fiat era. And this is one of the problems. Why in the world would free people want to give gold another chance? It's not like the properties of gold have improved since 1971. It's still very centralized. It's very hard to move around. It's very hard to verify, as I discussed in yesterday's video. So I want to just end with a chart of Bitcoin versus gold so you can see this is very similar to the chart of Bitcoin versus Bcash. When this chart is moving up, the price of gold is appreciating versus Bitcoin. When this chart is moving down, the price of Bitcoin is appreciating at the expense of gold. And we can see that this has been a nasty, nasty thing for holders of gold. This is one reason Peter Schiff is so bitter. This has been a road straight down. And so this is the free market deciding. I'm not telling anyone what to do. I have a very small channel here on YouTube. I don't have that much influence on these very, very large markets, these trillion-dollar markets like gold. But here's what the free market has been voting, how the free market has been voting with its feet in the decision between gold versus Bitcoin, and then, of course, Bcash versus Bitcoin. So I think it's very important to be aware of these trends. If you're betting on gold at the expense of Bitcoin, you're basically saying, how lucky do I feel? Is this chart going to reverse? I think it's very, very unlikely, because I think we have a digital future, and I think all the demographics are against gold. When millennials and Zoomers receive gold from their Gen X and Boomer parents, if they receive any physical gold or gold investments, you can be sure they're going to liquidate it for other things, probably for some digital tokens, mostly like Bitcoin. So this is the sad demographic future of gold as well. Gold is still very beautiful. I like it very much. I like the way it looks, in the same way I like horses. But when I need to go somewhere, I usually don't take a horse. I take a car. In the same way, in the 21st century, in commerce and in store value, people are not going to be using gold. They're going to be using Bitcoin instead, as it slowly becomes the global reserve asset and the global reserve currency. If you found this video helpful, be sure to hit that subscribe and like button. Hit the notification bell if you want to be notified when I publish my next video. And let me know your questions and comments in the comment section below. Thanks a lot for watching, and I'll see you in the next video.